Hi, everyone. I'm Matt Clark, research analyst with Money and Markets, here with your weekly marijuana market update. Now, before I start, like I always do, I do want to make sure you're heading over to moneyandmarkets.com to sign up for our free daily e-letter. You get a free email sent to you by us Sunday to Saturday. Right, that's right, even the weekends. That contains safe, sound, smart, simple, profitable investment information from myself, from Charles Sizemore, from Adam Odell, from our entire team. They all work tirelessly to make sure we're getting you that information each and every day. So go to moneymarkets.com, check out the website, browse around, play around with the green zone rating system, look at all the things we have, create a watch list, all those kinds of things, and then sign up to get our free daily e-letter sent to your email address for free every single day. Now, on with today's podcast. Today, I'm going to talk about a few things. I'm going to talk about a particular trend I noticed in the cannabis industry, as well as I'm going to tackle a reader mailbag. And then I'm going to talk about some key information related to a few of our watch list stocks, and I'm going to get to that here in just a second. But I'm going to start with a trend. I was reading a report published the other day on trends in the medical marijuana field. Now, medical tends to be overshadowed in the news by adult use, so I thought it was kind of important to discuss this report and kind of what it means, because we hear so often about legalization of adult use and things like that, but we tend to forget that in terms of cannabis companies and revenue, there is a large slice of that pie that is reliant on the medical cannabis field. Now, one thing I found important was that medical users are actually using cannabis at a higher rate than adult use consumers. About 41% of medical users in this report said they use on a daily basis. That's 11% higher than adult use consumers. So basically, medical users are using much more than adult use consumers. Medical users also actually spend more than adult use consumers. About 30% of medical cannabis users spend more than $100 per purchase. So that's every time they go to a dispensary, they are spending at least $100 and more, compared to just 22% of adult use consumers saying they do the same thing. Now, the other thing that I found interesting was that the report showed medical users are also actually a bit more diverse in how they consume cannabis. Around 46% of medical users consume smokable products. That's pretty comparable to the 59% of adult use consumers. Now, medical users also consume more vaporizer, concentrate, and other products than adult use consumers do. And medical, another thing to note is that 42% of the respondents in this report did identify as being a medical user. That's up 7% from 2018. So the medical market is growing. States legalizing medical use certainly helps that. But I think that's an important number to look at, and that the medical use community is actually growing on a year-over-year basis. So it's telling, and it's something that should be of note to cannabis producers. Medical users seem to be more open to consume in different ways. There are more of them, and they are spending more money. And because medical users do use more and spend more, the medical side of the market shouldn't really be forgotten when it comes to looking at the overall cannabis picture. And it shouldn't be overlooked when we're looking at particular cannabis companies to invest in. It's important that there's a nice balance, and if you can find a company that is kind of both in the medical and the adult use business, then I think you're doing yourself a world of good. Now, speaking of investing, I want to address an email from a viewer on a particular stock. Sergio emailed me at feedback@moneyandmarkets.com. He said, "Evening, love your content and thank you for all the information you present on YouTube and the newsletter. I'm curious about GRAMF. Is it good, bad, a short play, a long play? Should I even waste my time? Don't hold back any punches." Well, of course, I'm more than happy to take a look at that for you, Sergio, and I do appreciate the email. TPCO Holding Corporation trades over the counter. The ticker symbol is GRAMF, is a California-based retail cannabis company. It's got about 17 different brands ranging from whole flower to pre-rolls to vaporizers, cartridges, gummies, chocolates, beverages. It kind of runs the gamut in terms of products that it offers in the cannabis field. Now, the company was formerly known as Subversive Capital Acquisition Corp and changed its name to TPCO Holding Corporation. Now, don't confuse it with Subversive Capital LLC. There are quite a few Subversive Capital companies out there, so just make sure you understand which one I'm talking about here. Subversive Capital LLC was a special purpose acquisition company, or SPAC, that recently acquired Israeli cannabis producer Intercure LLC back in January. Now, In terms of TPCO Holding, there's very little out there in terms of its finances because it only started in 2019. However, I did find some revenue projections for 2021 and 2022. In 2021, the total revenue projection for the company is about $313 million, and that's expected to go to about $560 million in 2022. But I did find something interesting about its net income. This is where I did find some information that dated a little bit back to give a better comparison. From 2019 to 2021, the company has and is projected to lose money, and a lot of it. It lost an estimated $40 million last year, projected to lose another $31 million this year. Now, projections for the company are to have a positive net income of about $28 million in 2022. I think that might be a bit lofty. I'm really not too sure how they go from a loss of $40 million to a loss of $30 million to almost a $50 million swing to a gain of $28 million in just a year. I'm not really sure how that's going to happen. I didn't really see anything definitive that would tell me that they've got a plan in place to make that happen. Its stock price movement also tells a story. So if you look at the chart, you can see here that the stock traded fairly level in 2020 at about $10 a share. There was a pop in mid-January to around 13 per share, but that was followed by a sharp drop off to under $8 a share today. So it's actually trading below where it was trading consistently even during the COVID-19 pandemic. And that tells me this company is going to continue to struggle, and it's going to continue to struggle financially. Its stock price is going to struggle a bit. It's testing some resistance at a little over $8 a share. That is a bit concerning, and its financials, I'm just really not sold on its projections right now, just because I don't see a definitive plan in place that tells me that it's going to make that kind of a revenue jump, a net income jump of $50 million. They may be getting $200 million more in revenue, but to the offset that percentage and make it a $50 million switch up in net income is a little far-fetched to me. I think they're still going to lose money in 2022, but I could be wrong. It's entirely possible. Again, it's not that TPBCO is a bad company by any stretch, because it's not. I don't want to say any company is a bad company. Just when you look at it on paper and when you kind of analyze it financially and then analyze the stock picture, it doesn't really give me a whole lot to salivate over. It doesn't give me a whole lot of excitement in terms of wanting to say this is a good potential investment for you. So for right now, Sergio, this is a company that it would be a pass for me. Will it make money in the future? Perhaps at some point. Does it make them a company that I want to invest in now? No, not really. If you wanted to buy a dip, perhaps it could be a possibility because the stock price is relatively low by comparison. But I wouldn't be comfortable with the stock until I see it sustain a bit more upward momentum. As we like to do here is to buy high and sell higher. We like to see stocks that are in a confirmed uptrend. And right now, this stock, GRAMF, is not there. So it would be a pass for me for right now. It could be that way at some point in time. It's just not there for me. So Sergio, thank you for the question. I do appreciate that. You can send those questions anytime to feedback@moneyandmarkets.com. We'll post that email address down below there. Now, I'm going to talk about some news surrounding our Money and Markets Cannabis watch list. I'm not going to talk about every company, but I do want to talk about some things that have highlighted. As of today, our watch list average gain is about 40%. It's been holding steady at that level for a few weeks now. There's been some headwinds and then some tailwinds kind of going back and forth. Of course, the cannabis market is volatile, so remember that. It's not necessarily a market that you're going to see a consistent uptrend or a consistent downtrend. It kind of moves up and it moves down. So just be aware. We've been higher, we've been lower. 40% is a good kind of middle ground of where we're at right now. But there has been some news concerning some of our holdings. I did get an email from someone asking me why I don't talk about High Tide more. It's not that I don't talk about it more. It's just I kind of like to bring it up when there's actually something to talk about. And this time around, there is. The cannabis company recently entered into an agreement to buy 80% of Wisconsin-based Fab Nutrition LLC. They're going to spend about $20.6 million on the deal. And it comes with a 3-year option for High Tide to buy the remaining 20% of the company. So in 3 years, High Tide could exercise that option and spend $3, $4, $5 million and buy the remaining 20% and own the entire company. Now, Fab sells hemp-derived CBD products across the U.S. The company had an average order value of around $92 per order in 2020, which is actually pretty good. That's not a bad order to have, especially during the pandemic. And overall, this is kind of a good fit for High Tide. The company's trying to make inroads into the U.S., and this is a good way to do that. It's really bolstering up its e-commerce platform. and then adding this Fab Nutrition product, the product line there, I think is a good mix for them. It gets them into the CBD market pretty strongly, and I think it's a good thing for them. Right now, the stock for High Tide is down about 14% since I recommended it, since I put it on the watch list in March. Not concerned. Again, this is a stock that trades at around 50 to 60 cents a share. We're a little lower now. If you wanted to buy more, I wouldn't be opposed to that. I think it's gonna take off. It just needs that right catalyst to get in that direction. GrowGeneration Corporation trades on the Nasdaq under GRWG. The company recently announced a new partnership with Jim Belushi's Oregon farm. Jim Belushi, of course, famous actor. John Belushi is his brother. GrowGeneration will outfit Belushi's newest greenhouse in Oregon. The company also announced it is entering the Mississippi medical cannabis market after that state's voters approved medical use back in November. GrowGeneration stock is up 58% since I put it on the watch list in November. Finally, Turning Point Brands trades on the New York Stock Exchange under TPB. The company announced its quarterly earnings last week. It reported a year-over-year increase in net sales, about 18%, 19%, gross profit of 28%, net income, and adjusted earnings before interest, taxes, depreciation, and amortization, otherwise known as EBITDA. That grew year-over-year 57%. Turning Point Brand stock is now up 56% since I added it to the watch list in October. Now, I've got a lot of other questions I need to get to, and I'll get to those as soon as I can, but keep them coming. If you do have a cannabis stock, something like that you'd like me to look at, or maybe a sector question, then email me, feedback@moneyandmarkets.com. Coming up, we're going to have much more here on our YouTube channel, Bull the Bear podcast, as well as our as well as much more. Don't forget about Ask Adam Anything, our video series where I get to sit down with Chief Investment Strategist Adam Odell and ask him any question you ask, anything. Nothing is off base. So feel free to send those questions in as well. Green Zone Fortunes co-editor Charles Sizemore also has a weekly series called Investing with Charles. He breaks down stocks each week. If you are an income investor looking for maybe a good dividend play, or maybe a dividend play to stay away from, then Charles is your guy, and I invite you to check out his series on YouTube. Comes out once a week as well. Check out moneymarkets.com each and every day. New content we put up there that provides safe, sound, smart, and simple profitable investment information for you. And so check all that out. Sign up for our free daily e-letter. I'm Matt Clark, research analyst for Money and Markets, host of the Bull and the Bear podcast. Until next time, everyone, safe trading.